Back earnings alert. Dow Chemical reporting mixed results for the third quarter. The company beat earnings expectations on the bottom line, but revenue missed expectations. The stock is jumping on other news this morning. The company is raising its dividend, raising its buyback plans, and it is also announcing a reorganization of its leadership. Joining me right now in a First on Fox Business interview is Dow Chemical CEO Andrew Liveris. Andrew, it's always nice to have you on the program. Welcome back.
Thank you, Maria. Nice to be with you this morning.
Got a lot of headlines here, but first let me get to the main one, and that is over earnings and really what the world looks like today. The company is, of course, throughout the world, and we're having this debate on how strong things really are in the global economy. How would you characterize things right now?
We see in Q3, we saw the beginnings of the new China emerging for us in particular. We had in China 12% year-on-year volume growth. Actually, we've had volume growth in China all year. And the new China, as I define it, which is obviously one of the three world's anchor economies, with China becoming better, we all become better. In essence, what we're seeing is China's pivoting of its spend. A lot of consumer-driven items now in China, from packaging to autos to housing. We have the product mix for that China, not the industrial export commodity China. That's been a deliberate strategy of ours, and it's working, Maria. And frankly, the U.S. is still strong. And Europe showed, for us in Europe, we had a really very good quarter, especially on volume. Volume was up 3% in Europe. And what we're seeing also in Europe is the beginning of recovery there as the euros come way down. In fact, our plastics business in Europe went on order control in the last few weeks, and we've put in price increases driven by this demand. So we're seeing between Europe coming back, China coming back in its new form, and the U.S. staying strong and getting stronger. We're actually, right as we speak, in October, we saw this continue. We've had a year like that, where this is our 8th consecutive quarter of volume growth, consecutive quarters volume growth, and our 12 consecutive quarters of year-on-year margin on EPS and EBITDA growth. So, frankly, we've got the product mix for what I call a recovering world economy.
Yeah, the rate of change certainly looks very promising. And I'm glad you mentioned the product mix, because you have been, in fact, tilting the product mix now for a little while, basically tilting toward specialty chemicals more and securing cost advantages in terms of feedstock around the globe for the downstream and higher margin businesses. Where does that stand, and how much of the improvement that you saw in Europe and globally is due to your shifting in terms of your product mix and less about the global story?
If we were the company we were 10 years ago, fully exposed to commodities, we wouldn't be earning half this amount, Maria. So what we've done at Dow is not only done the value add stuff you've talked about, we call that our innovation agenda. We've also built low-cost positions in key parts of the world. So we have our integration agenda. So that's what I mean by a structurally hedged portfolio. We're low-cost where we need to be in all the world, but we have value add wherever we need to be based on today's needs, whether it be electronics, automotive, consumer, packaging, all the things that the world is consuming. You go where growth is. So that big tilt in the product mix, where are we? Well, part of the announcements this morning, you would have seen that we're closing out on our 3-year goals 1 year early, and we've announced new 3-year goals. We are very down the path now of becoming the company that can deliver consistent earnings growth and strong cash flows. Our cash flow story, you may have noticed, $2.5 billion in the quarter, $8 billion trailing 12 months, $5 billion this year. That's a 41% increase on cash flow year on year. And that story is unfolding in front of investors as we speak. And that's why we're returning that cash to owners, because they've been patient the last many years as we've remade the portfolio. We believe we are in the 7th or 8th inning of a 9-inning match, not an overtime match, of our portfolio transformation. Yeah. Our portfolio transformation, you saw some announcements today around our JVs in Kuwait, things we're doing around Dow Corning, and, of course, statements we're making about our Dow AgroScience business.
I want to talk about that, because this is all part of that 3-year plan. You're reducing the ownership in the Kuwaiti joint ventures, and you're also making some changes in the chairman's office. Can you tell us what you're setting us up for and what these changes are about? And then, of course, the giving money back to shareholders through that dividend and buyback plan. Go through some of these major headlines this morning, Andrew.
Sure. So every good board works on succession. I'd like to think that day one of my appointment 11 years ago, almost 11 years ago, Maria, we worked on succession then. But as you get closer and closer, the succession process becomes more acute. You look at people inside the company, you look at people outside the company. All good boards do comparators. We're very much blessed with talent here at Dow. We have great talent on the bench, and we're beginning the processes of putting in place people that one day may succeed me. We definitely, through the elevation of both Jim Fiddling and Howard Ungerleider, believe we have two incredibly talented executives. We've given them bigger responsibilities, working very closely with me on this next 3-year plan, the plan that we just outlined, the one you referenced, and constructed this office of the Chairman and CEO, which all companies do at various times, to have, if you like, a troika of people running the company. I'm very excited about Jim and Howard as people who are very, very talented. And, we're a company that exports CEOs. I've got a couple of CEOs out there in other companies right now over the years that have been developed here at Dow.
That is terrific, and I think that the market is reacting to that this morning, Andrew, with people seeing this long-term plan being put in place. Was revenue down largely because of pricing and currency, or was this something else?
Mostly currency, some oil-related effects. You look at Europe, revenue's down almost $1 billion year on year. That's all currency. And the same with Brazil, South America. That's all currency. We do have about 15% of the product mix that's oil-related. That's the rest of it, all local price down. So if you look at local price around the world, oil went down 50% in this time frame year on year. Our prices on a local basis went down about 6 to 8%. So we've held price, and as I mentioned already, we're actually increasing prices in certain parts of the world. So mostly currency, Maria.
Andrew, real quick, where does the growth come from at Dow in the next 3 years?
Oh, clearly our value-add positions. I'm not going to take the time in the show. We've launched over 5,000 new products this year, 50 of them big game changers, from Betamate lightweight adhesives to Evoke ingredients for paint. I can go on and on, I won't.
Right.
We have innovations coming out of our ears. We are going to fund growth organically. We have no need for M&A. The cash going back to shareholders. We are generating cash. We've got more cash coming. As our big projects come online, our capex will come down. That's more cash. And frankly, increasing dividend on a consistent basis and share buyback while we're undervalued.
All things investors love to hear. Andrew, thank you. We'll see you soon. Andrew Liveris there, CEO of Dow Chemical. We'll be right back.